What if I told you the difference between retiring rich and working forever could come down to one decision: where you put your money, real estate, stocks, or crypto? Each promises wealth, but each hides risks that could wipe you out. Which is the real path to financial freedom? Today, I'm breaking down the myths, the math, and the mindsets behind the world's 3 most popular investments. By the end, you'll know exactly which asset class fits your goals, your risk tolerance, and your future. Let's dive in. Welcome back to the channel, where we turn financial confusion into financial confidence. If you're new here, hit that subscribe button and ring the bell so you never miss a strategy that could change your life. Today's topic is one of the most debated in personal finance. Should you invest in real estate, stocks, or crypto? We'll compare them head to head on risk, reward, and when to choose each, with real numbers, real stories, and real talk. First up, real estate. When most people think of building wealth, they picture owning property, maybe a house, a rental, or commercial buildings. Real estate is tangible. You can see it, touch it, and in many cases live in it. It's been the foundation of wealth for centuries. Real estate can generate rental income, appreciate in value, and lets you use leverage, controlling a large asset with a relatively small amount of your own money. There are tax advantages too, but it's not all sunshine. Real estate comes with headaches, tenants, repairs, illiquidity, and high entry costs. Next, stocks. When you buy a stock, you're buying a piece of a company: Apple, Tesla, Amazon, or thousands of others. Stocks are the backbone of most retirement accounts and have created more millionaires in the last century than any other asset. Stocks are highly liquid, easy to diversify, and historically provide strong long-term returns. But stocks are also volatile. Prices can swing wildly, and crashes can wipe out years of gains in days. And then there's crypto. Bitcoin, Ethereum, and thousands of other digital currencies have exploded onto the scene in the last decade. Crypto promises decentralization, transparency, and, for some, life-changing returns. Crypto markets are open 24/7, offer high potential returns, and are borderless. But crypto is the Wild West. Prices can double or halve overnight, and the regulatory landscape is still uncertain. Let's talk about risk. Risk isn't just about losing money. It's about uncertainty, the chance things won't go as planned. Every investment has risk, but the type and level of risk varies. Real estate feels safe because it's physical, but it's not risk-free. There are market downturns. Remember the 2008 housing crash? Real estate is illiquid. You can't sell quickly if you need cash. Leverage magnifies both gains and losses. There's tenant risk, vacancies, non-payment, property damage. Local factors matter too: neighborhood decline, natural disasters. And don't forget high transaction costs. Stocks are easy to buy and sell, but that liquidity comes with volatility. There's market risk. Prices can drop fast, like during the 2020 COVID crash. Company risk is real. Bad management, fraud, or bankruptcy can destroy your investment. Emotional risk is huge. Panic selling during downturns is common. If you invested in Enron or Lehman Brothers, you lost everything. Even blue chips like Facebook or Netflix have seen 30 to 50% drops in a single year. Crypto is the riskiest of the 3. There's extreme volatility. 50% swings in days are not uncommon. Regulatory risk is real. Governments could ban or restrict crypto. Security risk is huge. Hacks, scams, lost passwords. Technology risk, bugs, forks, obsolescence, can wipe out value. And there's a lack of intrinsic value. Prices are often driven by speculation. Bitcoin dropped from $64,000 to $30,000 in a few months in 2021. Many altcoins have gone to zero. So how do they stack up? Real estate has lower day-to-day volatility, but high leverage and illiquidity. Stocks have moderate to high volatility, but are easy to diversify and sell. Crypto has extreme volatility, high uncertainty, but the potential for huge gains. And now let's talk about rewards. Real estate can provide appreciation, rental income, tax benefits, and leverage. Historically, U.S. real estate has appreciated about 3 to 4% per year, plus 6 to 8% rental yields in some markets. With leverage, returns can be much higher or lower. Stocks have been the best performing asset class over the last century. You get capital gains, dividends, and compound growth. The S&P 500 has returned about 10% per year on average since 1926, including dividends. Crypto's rewards are legendary and infamous. There's explosive growth. Bitcoin is up over 10,000% since 2010. You can trade 24/7, and there are new opportunities like NFTs and DeFi. But many coins have crashed to zero. The upside is huge, but so is the downside. So who wins? Real estate is steady, leveraged, and income producing. Stocks offer high long-term growth and are easy to diversify. Crypto offers the potential for massive gains, but with high risk. Now, when should you choose each? Real estate is best for people who want tangible assets, are comfortable with leverage and long-term commitments, and don't mind dealing with tenants or property management. It's great for those who want to build wealth slowly and steadily, and who have enough capital for a down payment and reserves. But avoid real estate if you need liquidity or don't want to manage property. Stocks are ideal for anyone looking for long-term growth, people who want liquidity and flexibility, and those who prefer passive investing through index funds or ETFs. But avoid stocks if you panic during market drops or need guaranteed returns in the short term. Crypto is for risk-tolerant investors, those who believe in blockchain technology, and people looking for asymmetric bets. Small investment, big upside. It's best for a small portion of your portfolio, for those who can afford to lose what they invest, and for people who want to experiment with new technology. Here's a secret. You don't have to choose just one. The world's best investors diversify. A balanced portfolio might include real estate for stability and income, stocks for growth, and a small slice of crypto for upside. For example, you might allocate 60% to stocks, 30% to real estate, and 10% to crypto. Adjust based on your age, goals, and risk tolerance. Let's look at some real-life examples. Meet Sarah. She bought her first rental property at 28, using a 20% down payment. Over 10 years, her property doubled in value, and she used the equity to buy 2 more. Now, her rental income covers her mortgage and living expenses. Mike started investing $500 a month in index funds at age 25. By 45, thanks to compounding and market growth, his portfolio is worth over $400,000. Alex put $2,000 into Bitcoin in 2015. By 2021, it was worth over $100,000. He sold half, kept the rest, and now uses crypto to experiment with DeFi and NFTs. Each path has its own challenges and rewards, but all 3 stuck to their plan, managed risk, and reaped the rewards. No matter which asset you choose, avoid these mistakes. Chasing hype, over-leveraging, lack of research, emotional decisions, ignoring fees and taxes, and not diversifying. Ready to take action? And here's your plan. Assess your goals, know your risk tolerance, educate yourself, start small, diversify, and review regularly. So, real estate, stocks, or crypto, which is best? The answer is, it depends on you, your goals, your risk tolerance, your timeline. But now, you have the knowledge to make the right choice. If you found this video helpful, smash that like button, subscribe for more, and share your thoughts in the comments. Which asset class are you most interested in? What's your experience been? Let's help each other grow. Thanks for watching, and remember, it's not about timing the market. It's about time in the market and making smart, informed choices. See you in the next video.